Okay, welcome everyone. My name is Raja from Dominion Markets, and today we're going to go over something very important. It's basically risk management. It's not your traditional risk management where we're going to talk about risk reward, or we're going to talk about where your stops should be, whatever. We're going to focus on how to lose less, because in the beginning when clients come over to a platform and they go to let's say our prop arm, Dominion funding or whatever, the main idea is, or the main what people want to do is they want to make a lot of money quick. But what ends up happening in the beginning is you start losing a lot in the beginning, right? So let's not focus on how to make the most amount of money. Let's focus on how to lose the least amount of money. That's more important, because in the beginning you got to be able to make sure you can stop the bleeding, right? You can make sure you lose less, because when you can lose less, that's the only way you're going to be able to make, or to basically to appear that you're making a lot of money. Because at the end of the day, you're not going to be able to increase your wins. Your wins are going to stay the same. I've been in the industry for about 9-10 years. Your wins are going to stay the same, but the only thing that can change is the amount you can lose less. If you can lose less, your wins will automatically look bigger and you're going to be on the profitable side. Now, when we start that, so let's say for example, right? Let's say for example, we have a support right over here. You have a support, candle came down, it's a bearish candle, another candle came down, it's a bearish candle, boom, and now we have created a support. This is basically on the 30-minute time frame, right? You've created a support on 30-minute time frame. So now you're thinking to yourself, well, okay, if I think that the next candle can continue to push up, where will your stop loss be? Ideally, your stop loss is probably going to be below the 30-minute candle. You will execute a buy, and you will anticipate the next candle to continue to push up. So let's say you're in a buy position right over here. Later we're going to go into some examples as well. Let's say you're in a buy position right over here, and if you have a 15-minute candle, let's say that this is a 15-minute time frame right over here. The 30-minute candle has closed bullish. So one 30-minute candle is equals to two 15-minute candles like this. And when the new 30-minute candle starts, the 15-minute candle starts to move up, and the last 15-minute candle of the 30-minute starts to close bearish, and you're already in a buy right over here. What I like to do at this point is to close 50% of my position, because I don't want price to come back down and hit my stop loss with 100% loss. I would rather lose 50% than to lose 100%, right? So let's get into the simulation. This simulation is sponsored by obviously Dominion Markets and MT5 Simulator. The link is in description. So we're going to go to 16th March, start simulation. So we're going to go to 16th March, and then we're going to continue on to see how we can look at price. So we're going to go to 30-minute time frame. Let us set up the template and we'll be back. Okay, so here we are. This is the 17th of March. You can see this is 2 hours before London Open. This is pre-London. Let's forward this candle and see how the candle closes. Now the candle has closed bullish right over here, right? So if we look on the 1 hour time frame, we know that there is some sort of a range that price can move into. So now we're looking at the 30 minutes. So what we're going to do is we will look for a small confirmation that what can make price go up. So you can see right here, the candle has no wick at the top. So we're going to wait to see if we can create a wick down, and then we could potentially continue to push up. So let's play this right over here. You can see now the candle is moving up, right? That's not a good trade. We have to wait for candle to make a lower wick first, right? So now it's still open, it's playing, right? So once we create that lower wick, you see this right over here? You see that retracement? This is something you want, because in the beginning, the biggest problem is that you will start to take a buy as soon as candle goes up. But when you take a buy as soon as candle goes up, you don't know when the candle will continue to push down. So which is why it's very important for it to make a lower wick. And when we play this, and once it starts to break above the previous candle's high, right over there, that's your indication for a buy at this point. So let's say, for example, I want to go with the risk percentage of, let's say 1.5 whatever percent, and we want to take a buy. We'll execute a buy. Stop loss is probably going to be below this wick, and we're anticipating price to continue to push up, right? We're going to accept this, we're going to play this, and then we're going to see if there's some sort of opportunity for us to manage risk if in case price does not go up. So we're going to be looking at the 15-minute candle right over here. Look, the 15-minute candle has closed bullish. This is pre-London time, which means there's volume at this point. You can look at the time right over there, looking at a 30-minute time frame. Well, we're pushing up right now, so we don't know whether we're going to be able to manage risk or not. The candles are still open. We're still moving. You can look at the profits right there. Let me bring up the trade panel. Up about 7 pips, 8 pips. See, we're rejecting right there, but the candle is still open. So let's speed it up here a little bit, maybe right over here. All right, so we're up 17, 18, 19 pips. Okay, this is a winning trade. I was hoping we're going to have a loss so I can clearly show you how to manage risk, but it's a winning trade. Okay, so let's close full right over here, and let's wait to see if we can get some sort of an opportunity to take some sort of an opposite trade, right? So we can learn how to manage risk. So let's pause this and let's forward, right? Forward, we're moving up. Awesome. So now, if we're moving up, I think there could be an opportunity for price to take a sell, because if we can create resistance up over here, and if we measure this range, this is a 76 pip range. Okay, awesome. Great. So let's forward this candle. Let's forward this again. Now we have a candle that has closed bearish, right? So now, hypothetically speaking, we have a candle that's closing bearish. So of course there's some sort of a resistance form right over here. So now what we're going to do is we're going to start to look to see if we can take a potential sell trade. For us to take a sell trade, this is the 15-minute time frame. The next candle, let me bring this up right over here. The next candle should not break the high of this 15-minute candle. If the next candle breaks the 15-minute high, then there's a very big probability we may not continue to push down. So let's execute a sell. This is, by the way, the simulator. So profit is going to be down over there. We're going to have our stop loss above this candle, looking at the 30-minute time frame. And right over here, we're going to accept. And let's start to play this. Look, so this is just an example, okay? This is just an example. The candles are open. This is London open, and candles forming right now, right? If there's some sort of a retracement, now look, once we are in profits, right? Once we're in profits, so if you look at this right over here, we're up about 11 pips at this point. The main thing is whenever price is in profits, and if it starts to go to your entry point, and then if it starts to go to in drawdown, that's where I'm going to be looking to manage risk, right? So let's hope we go back and draw down. We're going to hope we're going to go back and draw down. The candle's still open. We're in profits. We're coming up. We are basically struggling. So let's speed it up here a little bit over here. Wow, it looks like we're going to have this winning trade here as well. We speeded it up. And yeah, well, it looks like it's going to be a winning trade here. I was hoping to see that we would get a losing trade, but yeah. Okay, so here's what we're going to do. We're going to go to the next setup, and we're going to look for a losing trade where we can basically show you how to manage risk properly. Okay, here we have a scenario, right? So we have the 30-minute time frame that's creating a support. We have a support form right over here. And you can see how the 30-minute candles have closed above this resistance here to the left-hand side. So now this gives us an excellent opportunity to execute sort of like a buy opportunity where the 15-minute candle is closing heavily bullish. So we're going to execute a buy. Of course, the stop loss will go right over here move, let's say down over there, we're going to remove the TP because we can't see what's ahead. So we're going to accept this and we're going to start to play this right over here. Now this is the 15-minute time frame that we're looking at. Currently the 15-minute candle is making a lower wick to continue to push up, and we're going to let's see how the 15-minute candle closes. So what I'm going to do is I will pause this and forward, and now you see how the 15-minute candle has closed. The 15-minute candle has not closed the way we expected it to close. So if you're looking at your trade right over here, right? So now you don't know whether there's going to be some sort of a retracement. You don't know whether the price will continue to push up. So at this point here, I'm going to be looking to manage my risk. So let's say over here, I'm not too sure. So I'm going to close 50%. 50% closed right there. You know, because here's the thing. Whenever you're scared and whenever you are uncertain or you have doubts about your position or you have doubts about your trade, it's always a good idea to close 50%. Why do you want the whole position to run, you know, when you don't know whether it's going to be a profit or it's going to be a loss? You don't know, right? So most times what happens is that traders are going to let their positions run, hoping that they will get a profitable trade. They're hoping that price will continue to go in your favor. But the thing is, it's better to close 50% and leave the rest running. What if it goes in your favor? Rather than being scared and letting the position run. When you're scared, you're letting the position run, what's going to happen is you're going to close prematurely, or you're going to go in a deeper drawdown than you expected, right? So whenever you're scared, you have doubts, or you're not too sure, just close 50% and leave the rest running. So what we're going to do right over here is we're going to go here, hit BE, price is at break even, and just like, you know, let the thing run. So now you're seeing what's happening is, forward the candle, candle closed with a little bit of a rejection, right? So now let's move on to another example, and then we're going to show you how to manage risk. So we're going to move on to the next one here. All right, so now we have another opportunity. Of course, first things first, what is the trend? The trend is bullish. So when you have one candle that's closing bearish, is that a good idea to take a sell? Ask yourself, does one candle mean that you can take a sell? Absolutely not. You can't take a sell after you have one candle closing bearish. You need some more information, and more information is you need to see if we're going to create support. Like let's say, for example, this, right? The only way I think it's permitted to take a sell when we have heavy bullish trend is if we, let's say the next candle goes bearish, and the next one you have a bullish candle forming, you have a support. Once we break this support, this is the only way it's permitted to take a sell, because now you have, this is your confirmation candle and you're expecting the next one to continue to push down. In an uptrend, if you have an uptrend and you're not creating support and you're not breaking that support, don't take the sell. It's not good, right? So we have an uptrend, so we're going to wait to see what sort of confirmation we can get. So we're going to play this. This is on the 30-minute time frame. So we're going to look for 30-minute confirmation scenarios. I'm going to forward this on the 15-minute candle. 15-minute candle, take a look at this. 15-minute candle is starting to push up, but the 30-minute candle is still open. Like a lot of you guys are probably thinking that this is actually, that is the 30-minute candle closing right over there. So this is what we're going to do. Let's let this run, and then we'll try to take a buy once it retraces right over, let's say right over here, right? So we're going to take a buy. Let's say we are a new trader, so we're taking a buy, and our stop loss is somewhere down over here, right? If we have a buy, our stop loss is right down over here, and we're just hoping that in this heavy bullish momentum, we should continue to push up. So you can see the stop loss is down there. The candle, oh wow, look at this. This candle is continuing to push up. Can't even lose over here. Anyway, the candle is about to close. 3, 2, 1. The candle is closed. Look at the body of the candle. Look at the body of the candle. The body of the candle is small. So when you have a small body candle, what's the probability that the next candle is going to go up? Look at the 15-minute candles. Small bodies. So at this point, if you're hoping, let's take a look on the 1 hour candle. 1 hour candle is whatever. 30-minute candle is like this, right? So if you're hoping that the next 30-minute candle can continue to push up with this small, weak body. You know what I want to do at this point? I want to close 50% because I'm not too sure whether we will continue to push up or not. So I'm going to close 50% right there, taking some risk off of the table. If the next candle now breaks the low of the previous 30-minute candle, see that right there? Look at this. This candle has now broken the low of the previous 30-minute candle. So once we've broken the low, what does this mean? Let me explain to you this in a little bit more detail, right? What's the definition of a downtrend? When candles make lower lows and lower highs, right? So we've all learned that the downtrend is like this. Lower highs, lower low, lower highs, lower low, lower highs, right? In the candle's perspective, this is how the downtrend looks like. When you have candles making lower highs and lower lows. So if you look at this 30-minute candle, this 30-minute candle is breaking the low of the previous candle, which means that maybe it's going to make a lower low. So if it's going to make a lower low, does it make sense to be in a trade, right? But still, if you're hoping it may continue to push up, I would close another 50% to manage my risk, close, and let the rest see where it goes, right? So as we start to break lows, you're taking risk off of the table, right? The candle's still open, look at that. It's broken the previous low. Now, at this point, everyone knows, okay, now listen, whenever you're in a trade and you're in drawdown and you see price going against you and approaching a stop loss, sometimes we have this intuition that our stop loss is going to get hit, right? Right, Caesar? Yeah. Caesar's sitting right over there. And we have this intuition, the stop loss is going to get hit, but we still keep the stop. Why? Whenever you feel like the stop loss is going to hit, because look, this candle's coming down and I can feel that my stop loss is going to get hit. So why do I want to risk these pips? How much pip is this? This is like, 10, 11 pips. Why do I want to risk 11 more pips in order for my stop loss to get hit? So I'm going to close this trade, close full, and let the rest run. Just taking, wow, look at that. The stop loss would have gotten hit, right? So that's the thing. So whenever you're trading, you have to understand what risk you're coming in with. Like, let's say you have like a $5,000 account and you're looking to see that, okay, you know what, every day I'm going to risk about, let's say, $200. You have to ask yourself that how can you lose less than $200? How can you lose less than $100? Because every risk that you save is a risk you can use the next day. That's it. That's all what risk management is. Risk management, I'm not going to say it's about, risk reward, 1 to 1, 1 to 2, 1 to 3. Like, risk reward is all subjective. But when it comes down to like practicality, you have to be aware how candles are forming. If let's say the smaller time frames are breaking the highs or breaking the lows in. Once you see that high being broken, if you're in a sell, or once you see that low being broken, if you're in a buy, just close 50%. Take that anxiety off the table. There's no reason to let the whole thing run hoping it's going to go in profits, right? So if you want to watch this again, watch this again. This is highly educational. And listen, if you're wondering what this is the MT5 simulator. The link is in description. You can go check this out. I think it's one of the most, I would say, like, innovative tools that really personally helped me to get profitable when I start to trade. Have a great day. Hope this was educational. We'll see you on the next one.